Hello trading friends, and welcome back to Forex Focus, brought to you by IG, taking a look at the recent downside 10K crash in Bitcoin, what it means for a multitude of asset classes, including US dollar, that's seen a resurgence here amid this short-term for the moment, but potentially long-term crypto collapse. But let's start with that Bitcoin piece, take a look at the price action, as obviously there's been a lot of upside for Bitcoin the last several months. Market that's gone from below 30K to all-time highs near 74K. But in the last couple of days of trading here, really the last week, Bitcoin has lost more than $10,000 at certain points, going from 74 down to below 64. And the question becomes, can this market keep falling, or is this one of those short-term sell-offs on the way to even higher prices, as we've got a ton, an influx of information on this Bitcoin market, given its strong first quarter of the year, not only from a volatility standpoint, but also from major banks coming out with their own price targets, and they have a very wide variance, and that's owing to how volatile this asset is. So let's start with that Bitcoin volatility, as it's climbed up above 60% here for the first time this year, probably for the first time in the last year or so, but don't quote me on that, as this has definitely been one of the most volatile times for Bitcoin. And what does this 60% volatility mean? Well, it means that on an annual basis, it'd be very normal, or very within the realm of what traders think is possible for this market to gain or lose 60%. So you're talking about a market that right now, let's just call it 70K. People are expecting that it could move by $35,000, more than that, at 60%, more than $35,000 in the next year of trading. So that's everything from above 100K all the way down to around 30K in the realm of possibility for this market, given this recent volatility. And then you look at major bank calls for this Bitcoin market, and of course these price targets are some of the most irrelevant pieces of information that you could have on a market. It's literally a number that bank analysts put together, given, I'm sure, some very smart math and a lot of insight, but all of those maths and insights change literally every moment. But that being said, JP Morgan calling for 42,000, and Standard Chartered, the most recent price target for Bitcoin, 150K, which is maybe not looking so great given this recent drop in Bitcoin. But those price targets, both of them pretty much in that realm of possibility, given this above 60% volatility and what we just walked through. Another interesting piece of this is the US dollar resurgence that we're seeing. And now there's a bunch of stuff going on in the Forex landscape right now. We're in central bank meeting season, and what the Fed is going to do will dictate a lot of US dollar action, and might dictate a lot of Bitcoin price action as well in the near future. But US dollar is seeing a little bit of a flight to quality, especially in that Japanese yen market, Australian dollar market, and even the Canadian dollar market as well. And yeah, you can take a look at dollar yen back up close to 151. And you might remember that dollar yen, the 30-year high in that market, is right there around 151, 152. So dollar getting back to multi-decade highs in some pairs, and also seeing some gains in the against the euro, against New Zealand dollar, Canadian dollar, and Aussie, as well, as it's seeing a little bit of a flight to quality in tandem with this crypto sell-off. What also could be relevant here is the correlation between these two markets, because Bitcoin has actually been a little bit of a slippery asset recently in terms of its correlation. Not very strong correlation between Bitcoin and the stock market, or even the gold market, or any market that people like to say, oh, Bitcoin is like this. Not so many strong correlations there for Bitcoin. One of the strongest has been the negative correlation to the US dollar. And we've seen this play out in the most recent couple of trading days here, with US dollar resurging and Bitcoin coming off. But even that, as you can see, this is the rolling correlation. In recent months, that correlation has actually gone close to zero as well, as Bitcoin has really been doing its own thing. But if it stacks up a couple more days of large losses and large US dollar gains, then this historically negative correlation might get back to that negative 0.25, negative 0.3 area where it's historically been, which is to say, could get stronger once again. I do want to take a look at the price action and line these two up, because you do see some longer term trends between Bitcoin and US dollar. And remember, the last time Bitcoin saw its major crash in 2022, when the market went from its previous all-time highs there above 60K all the way down below 20, US dollar saw those huge gains. Now, what was going on then? That was when inflation was ripping higher, and interest rates in the US were also ripping higher, which you could make a case for put a damper on the demand for Bitcoin and the liquidity in that market, given that high interest rates make cash and being able to speculate on assets like Bitcoin a little bit tougher. And so we saw that big long-term trend play out, and as Bitcoin has risen in the last handful of months, US dollar has come off its highs a little bit. And now if you look at the rightmost part of this graph, you're seeing that US dollar bounce back and Bitcoin maybe put in its peak. You might expect that if Bitcoin fully crashes back down to those lows, it might be falling in tandem with maybe a resurgence in US interest rates and US dollar. Of course, can never predict what might be the reason for any price action, but you've seen the negative correlation. You're seeing Bitcoin move to the downside a little bit in recent trade, and you're seeing US dollar bounce back. Of course, on the flip side, if this is a blip to new all-time highs in Bitcoin, that could portend some bearishness for the US dollar, given those historical correlations. We'll see what happens. The only thing that I guess we can potentially count on here is Bitcoin volatility. Holy smokes, big moves in the first part of this year, running up to all-time highs in the mid 70,000 handle, and now giving back more than 10K in recent trade. We'll see where that crypto market moves in the future, and we'll see how it affects US dollar and other major assets. Thanks for watching.